Ray Dalio has just stated that the US and China are on the brink of war. And so that's what I want to dive into in this video. And so guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now, while I was away recovering from COVID, I actually noticed that Alibaba's shares actually started to decline significantly. They're now back down to the low $80 per share level after they, went up past $100 per share on the news that Alibaba was going to be committing or entering into some spin-offs. Presumably, I think the first spin-off was going to be the Xinyao business. Now, I don't exactly know what the plans for that are. They have been a little bit ambiguous, and so they're going to have to provide us with more details. However, it looks like the overall sentiment on China is now hitting a new low as geopolitical tensions continue to weigh, and it might be difficult for that particular IPO or any other spin-off activity to pick up momentum in such an environment, which was said by Marvin Chen, who's an analyst over at Bloomberg. And so, Alibaba stock may remain volatile, but effectively what they're saying is that downside risk might actually be limited as valuations approach single digits again. However, I would say that the $80 per share region is not necessarily a bottom. I mean, it very rarely goes under $80 per share, but essentially what I would say is that continue to focus on downside risk. It's not advice, it never is, but like when I think about the downside risk, when it comes to sort of like my portfolio, my double down was at a net purchase price of $70 per share. And so if I'm looking to double down again, I'm looking at something in the 60s, maybe even in the 50s. And if that becomes available, and in the next video, I will go through the options with you and show you exactly what we're seeing right now in this environment. And so you can see that the continuing unease may actually be what's driving Alibaba's share price down. And again, it's another reason why we should always be focusing on downside risk. And so with that said, Ray Dalio, he actually releases these thoughts, I guess, on LinkedIn. And so just yesterday he released what his thoughts are on the China-US relations, what their relations are with other countries, and what's going on in China. And what I really want to focus on is what he thinks is going on with the Chinese and US relations. And here's where it gets a little bit interesting. So he's saying that the United States and China are on the brink of war and are beyond the ability to talk. Now, I disagree. However, I do have to acknowledge that Ray Dalio is much older than me, much more experienced, way smarter than I am, and so he's seeing things that I'm just not capable of seeing potentially. And so this is what he's saying: they are close to having a sanctions war and or military war that neither side wants, but many believe will probably happen. And so first of all, I agree with this. And so essentially he's saying this will probably happen because each side is very close to the other's red lines. Each side is using brinksmanship to push the other at the risk of crossing each other's red lines, and politics will probably cause more aggressive brinksmanship over the next 18 years. And so essentially what he's saying is that he wants to emphasize that by saying that they're on the brink doesn't necessarily mean that they will go over the brink, but essentially what he's saying is that they are closer to war than they have been before. Now, the one thing that I will acknowledge here is that there's just been more tension in the Taiwan region than there has been in many years. And so I could understand why you would say that. I would say that one of the US's red lines would be further aggression in the Taiwan region. But the other thing is, I don't think China really wants to militarily take over Taiwan. I think that makes it very difficult to win the hearts and minds of the Taiwanese people. I think you just sort of continue with the status quo. I think that's the best course of action for the Chinese people, but we'll see how this plays out. Now, speaking of the red lines, Ray Dalio actually lists what he believes are some of the red lines. A well-known Chinese red line is that the United States or Taiwan coming out in favor of Taiwanese independence. And Ray Dalio says that that would be considered an act of war by China, and I agree with that. The second red line that he points out is that Chinese military planes and ships are testing previously established red lines. And that's that whole China doing war training or whatever with their planes over Taiwanese airspace or whatever that's been going on in that region. That's essentially what he's saying. It's sort of like pushes the US to sort of like almost want to retaliate. I think they did push a warship into that region as well. And so, you're getting closer to a potential conflict there. And I agree with Ray Dalio's perspective there. The next red line that he goes on to describe is China's dealings with Russia, which are leading the US and China to probe each other's red lines in this relationship. And here's an interesting point that he brings up. There is a debate in China about why it's acceptable for NATO to provide lethal military equipment to Ukraine, but not have China do the same for Russia. And so that's a very interesting point. I would argue that it's because Russia is the aggressor, and Ukraine is not the one trying to take over Russia. And so you're helping a smaller country defend itself from a larger bully. And so that's where I would say that this is not necessarily a fair point, and that would be my rebuttal to this. And so, the next red line is, of course, economic sanctions. China is considering reciprocating with its own sanctions against an American company because, the US cutting off China's access to essential chips is, pushing them behind. And so, if you are an investor in Micron, you could potentially be facing some sanctions. We'll see what happens, but that company derives around 25% of its revenue from China and Hong Kong. But I would say, virtually all manufacturing organizations, including, your Teslas or whatever, they all have relationships in China. And so, do further sanctions impact all of these companies? Apple is very levered to China. One of my positions, Canada Goose, is looking to grow in that region. And so what happens to their growth prospects? That whole investment thesis goes away if there's not a Chinese growth option there. But once again, I don't think that China would want to step on their own GDP or own economy to sort of like send a message. So, but we'll see how this sort of plays out. I just may not be interpreting it correctly because, does the economy really matter if you're coming up against a potential military threat? You know what I mean? And so they might be looking at it completely different. Now, Ray Dalio goes on to say that most of these conflicts are likely to intensify over the next 18 months. US-China relations are getting so bad that there is a reason to worry that anti-China sentiment could make doing business with China like doing business with Russia. That's where I would push back. I think China has a lot to lose in this situation as well. And so I would think that they would be sort of restrained in any sort of retaliatory efforts as well. And so there would be at minimum cause severe economic consequences for the US, China, and the world. And I've said this on this channel many times. Both China and the US cannot afford to not do business with one another. And my thoughts are that cooler heads will eventually prevail. Now, I might just be wishfully thinking here, but that's the way I'm thinking about it. Now, here's something interesting. Here's where I think Ray Dalio walks back his brink of war comments. Now, I might be misinterpreting this, so you guys let me know in the comments, but this is what he's saying. All things considered, I think that the greater provocations will most likely come from the American side, not the Chinese, which is very interesting. I don't believe the Chinese reactions to provocations will be strong enough to prompt a war in the near future, i.e. the next 3 years, because the Chinese don't want to go to war. I expect the Chinese side to be very restrained for the time being. And so if that's the case, I don't think it's the US that's going to try and start a war with China. And so, this sort of sounds like he's walking back the fact that they're on the brink of war. And so, I might be misinterpreting that, but you guys let me know. Now, it was said to him a number of times that when he was in China, they believe that some Americans are trying to bait them into a trap war that they want to avoid. If I saw more aggressive moves, especially if unprovoked from China, I'd be more concerned. And so overall, I stick to my whole original thesis and, what I've been saying on this channel for a long time. I think there's a lot of saber rattling, but both of these countries, they know that they have to be friends because they work together so deeply. And so there would be severe economic consequences for both of them, which we all know. I'm not telling you anything that you don't know, but it just doesn't sound right that they would both want to blow up their economies and their countries and have political instability, etc., as a result of continuing on a path of aggression. So we'll see how this plays out. But one thing a lot of you guys say that watch my videos is that you will never invest in China, and I totally get it. And so I got something for you. The Patreons have full access to this tracker schedule. And what happens is that if you click into any one of these tickers, I've grayed out the other ones, but you can actually get to a full model for the particular company. Now, Alibaba might not be the one for you because, it's a Chinese listed name. However, there are many other names, some of the most important American companies. For example, Alphabet's on this list, Tesla's on this list, Microsoft's on this list, Starbucks is here as well. So you can click into the models for any of those companies, and you get an idea of where they're trading at. I provide my perspective on what their intrinsic value is, and the model automatically computes their share price as a percentage of intrinsic value. You might have a different intrinsic value. However, taking a look at the way that I model it might help you in the way that you model it. And so the Patreons get access to this whole tracker and all of the company models that come with it. And you can get access to all of that at the lower tier at just $5 a month. And there's over 200 people who've currently joined. Now, some of the people have actually joined on the higher tier, and the higher tier, I believe, is the best value, where you get a monthly live call where I talk about sort of like the economy, the stock market, and where I think things are going. Then there's special live courses every month, and there's also, I'm building out what's called a comps schedule. Right now I have 63 of the regional banks analyzed using 9 key performance metrics, and then I'm going to be adding 20 more major US banks to this as well. So at the end of the day, I'm going to try and get the banks analysis up to 100 banks using key performance indicators, and then I'm going to add to this. I'm going to try to add insurance companies, etc., retail. There'll be a comp schedule for many different industries. And so if you're interested, I would encourage you to try and join us at the Patreon. Now, the other thing that I do want to point out is that the best value on this channel is the Q&A series. And so if you haven't seen any of the videos for the Q&A series, I find them very informative and very helpful. And essentially what I'm doing is I'm answering some of the hardest questions that you guys ask. And so if you haven't seen it, the link to the whole Q&A series is right here.